Welcome to TradeTheMBI.com. This is John. This report is for the 27th, and well, previously we had the move back above the 38%, and we opened up, came down a little bit, and tested that from a daily standpoint, and then shot right back up to the resistance right at the 50% line. And now that's turned around where we were slightly dipping before. We're now slightly rising, so we're still a little bit underneath it, but what we had here is the start of what we call it the snake. Well, we got into oversold right down here. When we reach these levels, that's why we kind of mark this here. We tend to get a bounce back. The question is, does it have legs, becomes the question. And in this case, we have the rising azure, which is something we've been talking about with our 5K charts, about how these tend to represent, bullish moves that either bring you back to the highs or take you to the lows, depending on where you are in relation to the Fibonacci and or what the shakeout is doing. In this particular case, what we see was the first start of an opening between the steel and orange, and this, when the orange is below and the steel is above, is typically bullish. The wider the spread, the bigger the move up. So in this particular case, it was the start of it right here, and you can see the expansion of it right there. And then this is normally where we would be talking about buy signals, but we've been able to identify it earlier, and we call this the snake because what you have is the mouth opening, and then the tongue of the snake is sort of the cyan here. The alien version of it is when you have the green over the cyan in between either the orange and steel, and then the red becomes the double-headed alien, when it comes out from you, for those that have seen it. But it's just an interesting representation so that visually when you see it, you'll recognize what's going on. And this transitions back when the orange crosses above the steel, ends that particular move. And now we also have rise and shakeout at the earliest parts of it. We're not too deep here. It's just going to be a little back and forth. And what's interesting from a chart analysis standpoint, we can remove these trend lines because this was just an interesting depiction for chart enthusiasts here. A rare one where you have what's called a cup and a handle. Cup and a handle. And they'll give you all sorts of variations on what that represents and everything, but at the end of the day, it's not all that relevant. Now, this has been a nice break. We talked about what we were expecting is to break down here with what we were seeing from the readings right there. And again, this one has orange rising with steel, so this was negative from the DOC spread all along right here. And then boom, we've had a nice cascade lower with it, starting to get back towards what we would call a normalized range. And this is something I was saying that we should be hitting down towards this 118, 113. It's actually closer to the 116. It goes back all the way over here. This has gotten out of range simply because they needed the support, and plus there was always this belief that the EU was doing so incredible, and we're seeing that that isn't the case, which anyone who's paid attention really knew that. So that weakness, flight back to bonds, even though rates are rising on this one, and we're still expecting that to move back towards the 113 range. Very oversold with that shakeout, but likewise, we get down to this super extreme situation, and you can see that opening right there. That's the same effect. Bullish little push right there. Don't expect it to last too long. Oil maintaining, everyone said, oh no, huge inventory. No, it's still being constricted because, again, this is going to get into a situation where the growth is the problem, not supply in that, and that's just going to squeeze what's available, and that makes it a little more valuable. Gold still being pinched a bit from way back over here, right below the ABM. We can see that taking place right before it decayed here with the DOC spread that started on it, and it's continued, hasn't changed, still oversold in that particular sense of and I hate saying that word because it's not necessarily oversold. It just means that we've reached a distribution, and that hasn't changed, which indicates that it's not necessarily oversold as much as it can continue to do the same, moving lower. So, look at this mess of lines. And what I'm depicting in a lot of this, and I haven't changed the colors on them, is just I wanted to show and you can see in the gold here, I'm working the pattern where where the blue, the dark blue that I have right here, that's just the beginning of rising azure lines. I'm working that program so that it identifies it just one time. not so simple within the language, but they'll be useful when it comes to additional readings, because we can compare additional factors within it. Probably won't even show these when it comes to the regular program. It'll just indicate that we're in like this gold trend. Just from a practical standpoint, we don't need information overload. There's already enough right here. Again, we get into these large spread situations from a short standpoint, but you have to see that red begin to flatten out. In this particular case, the cyan moving above the green. At the same time, you have this wide spread was the end of things, and then it just cascaded by the next bar. You had the lower red. So sort of like the warning, and then boom, lower red, and that was the start of not a very big decline, because what ended up happening was the tongue from that spread got cut off really fast by the orange dipping, and that's sort of like the warning point. And as soon as we had the crossover, which was right here, so it ended up pretty much a neutral situation from the first warning till the flip, and then that became the buy. And then this is what we talked about with that orange dip. This first rise tends not to be the thing, it's the second dip. Now in this particular case, that was just a continuation. We ended up creating a little bit of a discount. You can see we stayed positive shakeout. So from this standpoint of positive shakeout being green, it's maintained itself all the way through until we ended up right here rolling over. Couldn't quite get the red to dip with the green below it until right over here, which happened to be the peak. And then again, a similar situation happened as it was going. You ended up with the tongue getting cut off again, right about there, which was the warning that, hey, things are about to shift. And then sure enough, we got the closeout, which took place right here, which is a precursor even earlier to the full situation of orange below red. So this becomes helpful in capturing really viable situations. And then, of course, the cyan below 7.5, which we also had right here, is actually the 6 1/4 is what we look for. That's why I kind of marked it with that arrow. It's an indication that you're going to have a bit more of a run, and that, again, will usually last until you get the crossover, either of the steel or orange. In this particular case, that happened pretty quick after. But you still had the turnaround of new shakeout rising. So becomes multifaceted. Again, I always start with the shakeout and then move to the confirmation from the DOC. And you can see in this particular case, then we ended up with the white, which is gold. And when we recognize also, cyan below red, always along in this particular case, but this was recognizing the white candle, which is the steel, popping above that 13.5 on the return up, and that brought us all the way up to the highs right here before we ended up with, again, this crossover right here of the steel and orange that then separated dramatically at that particular spot. You still had rising red, so it took another bar or so before that turned over. And just depending on whether you wanted to be a little anxious or not, I literally used the 76%. The ABM yellow at that point was also perfect. And this is ties into the ABM yellow use, because for me, I use the green normally when trailing a long situation, but as soon as a short setup comes in, I usually jump to the tighter of the ABM yellow, just because at that particular point you're able to lock in the best rate of return. And something you're going to find happens a lot is when you move dramatically away from the ABM yellow, and that in a broad sense, normally you're going to come back to it. The question usually becomes how quickly and in what time. And in this particular case, sometimes you'll get the ABM yellow will rise at the same time, then you finally get a little fade and it comes right back to it. And as it did right as it was time for that short to start, it was pretty decent. And then a nice up run right through the end. And then all we've done is retrace right back here on the 50%. This is an old value from a positive extreme retrace. So I always keep those as like we have the 1650 from the 23% daily. I think that's the exact number. If we go back to it, let's change now. That was like from right back over here. We had the 23%. Now that they're moving back and forth, now it's 26.12 and a quarter. So we'll make those adjustments on intraday charts. But this is the value of having the gold set up, as well as the recognizing the Azure, because these represent the much broader time frame. Just to give a hint that things have a likelihood of continuing, at least. In this particular case, didn't take long because your expectation is just to move to the highs, and that's where it was. Really didn't take a whole lot. It doesn't guarantee you're going to get new highs. It just that worked out because of the rising shakeout, and you still had sign under red, so that tends to solve that one. But exciting nonetheless, and continuing to work that program so that we'll have those for the beginning of May. So as always, trade well, and we will talk again later.